people have invested in mining stocks before the year of 2000. It was the best way to have a piece of a puzzle in the mining, in the metals industry. But nowadays we have ETFs, we have copper ETFs, we have physical uranium ETFs, right? You cannot even buy physical uranium as a private investor. You have to buy those ETFs, but it's possible nowadays. And this has shifted the whole way of how we look at metals and also on minings. You do research on those topics. Please tell us why and what is the outcome of your research? What did you see? What are the numbers?
Okay, Jan, indeed, we do research on all the metal and mining ETFs worldwide. We use Microsoft Money, we track them, we track the number of shares outstanding and therefore the money in those ETFs. And the reason is it gives us great insights in the metal and markets worldwide. And here's why. The ETF market really started for metals in 2004 with GLT. Prior to 2004, there were no instruments to buy metals using exchange traded funds. So if you wanted to buy nickel, for instance, you would buy a junior exploration company or a senior company producing nickel. But in 2004, they started GLD, was the first ETF. It's now above 60 billion US dollars in that single ETF. And there's been an explosion of ETFs. So we're talking about the last 20 years, 22 years. There's now, we track as many as we can find. There's 284 ETFs, metal and mining ETFs worldwide, 284. So the assets in these ETFs reached almost $1 trillion. At the earlier this year, they're now back a little bit because of the declines in metals. To about 700 billion US dollars, but still orders of magnitude bigger than the biggest mining companies, the biggest gold companies, the biggest base metal producing companies. So what does this mean for investors and for the markets? What it means is that the money, a huge amount of money has gone into exchange traded funds. And when money goes into, for example, a nickel ETF, that nickel goes into a warehouse against the purchase of that ETF by the investor. So it's new demand. It's new demand for that metal, but it's not to a very large extent. If you're not investing in the companies that explore for it, that money has come from investment in new supplies, in exploration. And the consequence is that for 20 years, as this ETF growth has transformed the metal markets, there's been chronic underinvestment in exploration. For copper, for nickel, for new gold and silver assets. And in today's environment, that chronic underinvestment, 20-year history of chronic underinvestment in metal exploration is now also complemented by rapidly increasing demand from new applications, new requirements for copper and new requirements for nickel in energy transition requirements and military applications for antimonies and other critical minerals. So it's important, we believe that it's important, and that the ETF, that the analysis and study of ETFs, metal and mining ETFs, and give us great insights into what's the forces and effects that transpire in the metal markets worldwide. And that's why we do it and track those funds.
Okay, that's very interesting, and I think that shows the problem that we have in the world, because not so many people are investing into junior mining and exploration because it's way more risky to instead of putting money into an ETF. That's understandable, but in the end, CEOs like you guys need money to give us big deposits so we can have, for example, our iPhones or our computers whatsoever. We can only build them if we have the metals. So therefore, you guys need money. So give us an idea. You always do like a 6-month update on the research that was just recently. Give us an idea, what are the current numbers and what are the numbers that you're looking on, especially also at the mining CEO role on the other hand. So what are you looking at?
Okay, so just quickly on the 6-month update for ETFs, we saw broad declines. The best performers were the lithium and the Wisdom Tree tin. Tin prices rallied 70% in the first half at their peak of 2026 because of booming demand for artificial intelligence and semiconductors, and critical minerals also reflected in lithium after a 2-year sell-off. So the lithium ETFs was up 30% in the first 6 months of 2026, and the tin, Wisdom Tree tin, was up 28%. The worst performers were platinum and palladium, and they were the Japanese ones because in Japan they had not only the decline in platinum and palladium, but also currency devaluation in yen. So that's what we see. The other thing is we saw 10 new ETFs issued in the first 6 months of 2026. So that took our total to 269, actually, as of this morning at 284 ETFs, as I said. And those 10 new ETFs were critical minerals, leveraged. There was a new gold instrument from China. We call it China IMC, a digital gold ETF. So that's an interesting product. That trades in Hong Kong. I'm just reading the report here. And then we saw new critical mineral ETFs for nuclear energy, rare earths, and then some income-oriented ETFs. So, you can see asset managers issuing critical mineral ETFs and capitalizing on the trends in markets. But again, very little of it ends up coming towards the expiration for these types of metals that are being covered by the ETFs.
And what does it mean for the investors? I mean, we need those metals. So is it now the time, in your opinion, to position themselves into the exploration sector?
Yeah, absolutely, Jan. What it means is that there's mispricing, dramatic mispricing for exploration assets. All the money has gone into the metals. So you could get a double or triple of copper price, but you won't find the new supplies that can increase supply of that copper. So the investment opportunities today and the dramatic underpricing for exploration assets is the real consequence. And so in today's environment, you need to look for exploration assets in safe jurisdictions with the metals that are required, the transition metals that are required to supply the new requirements, the new demand requirements coming from energy transition and military applications, and the critical mineral lists that are being published by state entities and also even the U.S. Defense Logistics Agency and NATO. NATO published a critical mineral list in 2024. So, the requirement for metals is not just economic, energy transition, but also strategic and has military applications. So, the requirement for these metals can only be met by increasing, investments in exploration. And there's the effect of ETFs has been to take significant amounts of capital away from that for at least 2 decades. And so in 2026, the environment for outsized returns will be for astute investors who can pick up good exploration projects for the metals that are required.
Very good. That's very interesting. And it's also interesting, right? A couple of years ago, everybody was saying, well, the mining industry, it's just dirty. Nobody needs it, right? We have to go cleaner. And all those ESG fund managers were not investing into mining because it was too dirty. And all of a sudden, we see NATO, we see everybody in the world having a critical minerals list, and everything has changed. But still, the money is not really flowing into exploration. And you are also the CEO of Canuck Resources, meaning you are looking for critical minerals within Ontario, which is in Canada. So, Chris, obviously that's not an investment advice for our listeners, but you could give us an idea. What are you working on? Give us an idea, and what makes it so special, and why do you think you can really unlock a value for your shareholders?
Well, okay, I don't know why I wouldn't characterize it as investment advice. As the CEO of Canuck Resources, I am a consistent buyer of the shares at this price. And we are looking for very large deposits of gold, copper, and in our case also, because of the deposit type that comes with iron, we're looking at nickel, cobalt, and platinum group metals. And they're in the mantle in Sudbury, Ontario, Canada. So a good jurisdiction, very good jurisdiction for mine development and for capitalizing on the prospects for mine development, and also the right metal suite, a good combination of metals for the energy transition as it is today, as required today. So
perfect. And what are the news flows that you are focusing on? What is the most important things for the investors to look over the next few weeks and months?
In the next months, we have a production situation for gold that's going to allow us to stop issuing shares. We're pursuing that. We're also we've also just finished a seismic program that's going to provide data with actionable targets for IOCG exploration, very large, very valuable, high-grade gold, copper, in our case also, as I mentioned, nickel, cobalt, and platinum group metals in this metal suite. These are very substantial deposits, always associated with iron, And that's what we're looking for. The seismic survey paid for by the Canadian government on our ground for our shareholders. We'll have those results in 4 or 5 weeks, and it'll provide actionable drill targets for us to pursue early in the fall, which could provide a game-changing outcome for the company.
Perfect. Chris, thank you so much for giving us an overview, also insights into the mining and metals ETF, overview about Canuck. And for all the listeners that want to have more information, especially in German, you can look it up on the axinocapital.de/Canuck. And we also, Chris, produced a video together dedicated for interested investors for Canuck. That will be also linked under this video. Chris, thanks for your time. It was really interesting and looking forward to see the news flow.
Vielen Dank, ja.